Hi, I'm Matt Grudnoff. I'm the Senior Economist at the Australia Institute.
I'm Richard Dennis, Chief Economist at the Australia Institute. This is Ask an Economist.
Our question we've got at the moment is, what impact does immigration have on house prices? What impact does it have, Richard?
Well, what a great question. We've been arguing about this in Australia for decades, and now we've got this incredible natural experiment. And by that I mean, in economics, we don't usually get to lock people in a laboratory and poke them with things and see what they do. But every now and then something big happens and we can kind of watch what the effect is. So when we shut the borders, literally shut the borders with the rest of the world, when COVID first arrived, the number of people coming into Australia declined. Less tourists, less students, less permanent residents coming here. And indeed, a lot of people actually left Australia because they wanted to go back to see their family, or there was no work for them here anymore. So what we've seen in Australia is a natural experiment where instead of the steady increase we've had in population for years, all of a sudden it's gone dead flat. So yeah, Matt, some people have been saying immigration causes high house prices for years. Immigration's flat. House prices have gone through the roof. You tell me what's going on.
Yeah, exactly right. So, now that the borders have been shut for about 18 months, let's have a look. So our first graph I've got today basically just shows the CPI increase since...
so the Consumer Price Index.
Yep, so a basket of goods that most sort of average households consume. So it's basically from 2000, so for the last 21 odd years. And we can see it's a fairly flat increase. There's a little dip at the end, which is when inflation collapsed during the pandemic and the recession. But apart from that, it looks pretty flat. Now let's have a look at wages. We add wages on, and that's the green line. And we see that wages is only a fraction above inflation over that 21-year period. But, it is a little bit higher, and certainly wages over that 21-year period have been growing faster than inflation. More recently, they've been growing at about the inflation rate. They haven't actually exceeded it very much at all, and that's because of the flat wages rate. But then let's have a look at house prices. If we add those in, we can see them in the blue line. And we can see that, yes, house prices have boomed, okay? And they boomed from about 2000. They increased. They fell away a bit during the GFC. Then they boomed again. And then they fell away a little bit when the government, particularly APRA and the other financial regulators, cracked down on lending, particularly investment lending. And they came down a bit. And then right at the end there, we can see that they dropped a tiny bit initially when the pandemic recession started, so in the first half of 2020. But since then, when immigration has been flat, we can see that they've shot up to record levels again. And so this would seem to suggest that immigration doesn't have an impact on house prices, that there must be something else that's driving house prices that has nothing to do with immigration.
Yeah, well, what could that be? Certainly one of the things is very, very low interest rates, which have made a lot of people think, I can afford an even bigger mortgage, because a lot of people aren't looking at the price of the house they're bidding for, they're looking at the monthly repayments for that house. So
yeah, whenever you think about, okay, I'm going to go out, I've decided, I've saved up my deposit, I'm going to buy a house, the first place you visit is the bank. And the bank looks at your income and tells you how much you can borrow, and you use that number when you go to the auction. So if interest rates go down and everybody can borrow more, everybody shows up to the auction with more money in their back pocket. What happens? The house price goes up.
Exactly. And while some people might think, well, I'm not going to bid more because interest rates might go up, fair enough. That's the sound of losing at the auction, because the person who does show up saying, the bank said I can have it.
Yay!
What could go wrong? That's the person that literally wins at the auction. And if you got two of those people at the auction and you're sitting there thinking, I'm a bit more pessimistic, well, that's, as I said, that's the sound of losing at the auction. So what we're seeing is house prices pushed up by a lot of people who are willing and able to make very large bids on houses, because with low interest rates, the repayments are there. And also, I think there's a cultural phenomena going on. There's a lot of people stuck in their house thinking, we need an extra bedroom, or we really need a study, or we really need a backyard. So I think a lot of people who would usually spend, like if a lot of people in Australia afford to fly overseas with the family once a year, well, that's $20,000 that didn't get spent last year and it didn't get spent this year. And there's a lot of people thinking, well, reno would be fun, or a bigger house would be fun. So we've got low interest rates, and some people are changing their consumption bundle. They're buying a different bundle of things.
And also what we've seen is a real explosion back into the market of investors. And so house prices have started booming again. Investors have rushed in. Why do you think that is, Richard?
Well, some would say it's a combination of the tax benefits of negative gearing, the tax benefits of a 50% capital gains tax, and just the fact that the Australian tax system really taxes wealth and assets quite differently than it taxes income. So especially when people have fear of missing out, they see these prices going up. They think, you can't lose money in real estate in Australia. Say, well, look, they've been right for a couple of decades, but the consequence is, the Australian house prices have really gone through the roof. But what we know for certain is it's not rapid immigration that's pushing up the demand for housing. It's clearly not that.
Yeah, exactly right. So basically, to answer the question, immigration might have some small effect at the margin, but there are clearly much larger factors: lower interest rates, investors in the market, the tax incentives that investors get. These are the things that are having such a large impact on house prices. Immigration is minor at best.